You have watched hundreds of hours of ICT videos and traded for multiple years. You've tried strategies and you still find yourself in the same place of struggling to know where price is going. Today we're going to try and answer the question, why you still suck at trading. I want everyone to pause the video and mentally mark out your area of interest for the price action we have in front of us. If your trade setup looks anything remotely like this, I want you to sit back, relax, and try and neutralize your mind to forget about ICT. I want everybody to start thinking in boxes. These boxes are going to be fortified with wicks being created at the top and the bottom of this range. This could be a wick that is around 25% the size of the body. It could also be an entire doji candle, as there is no body, so the wicks are represented as one individual candle. And we're going to use price reacting from these zones at the edges of our boxes to get our entries. MCR is a candle theory model that we use on the microcycle range. MCR is formed 6 times a day. We have 6 profiles to represent each MCR range. I would advise you guys to pause the YouTube video right now to take notes of each timing for the profile so you know when each is going to happen. Let's start coloring in our MCR ranges we created for this day. I'm going to be highlighting the wick gaps created at the top and the bottom of each MCR range. I'm also then going to be highlighting a few doji candles for extra confirmation from these wick gaps that we drew at the high and the low of our MCR ranges. We are currently looking at the 15-minute time frame. We're going to be trading the New York AM profile. This profile will considerably be the most consistent for price action and large moves. So we're going to be sticking to that throughout this MCR session. Leading into our New York AM profile, what is our 15-minute wick gaps showing us? We are at the low of London profile with a 15-minute wick gap being our support. What do we have above price? We have overlapping 15-minute wick gaps with dojis overlapping on our low of the 8 o'clock profile wick gap on the 50-minute. So we can expect when price comes and taps into this area to reject from it. It can break through and use it as support. Or price can just completely exhaust and consolidate inside of it. So let's see what price does as we move through time and create our lower time frame MCR session. We are on the lower time frame. We're going to be using the 1 minute in conjunction with our 15-minute for reactions. But before we can use these reactions or try and anticipate these reactions, we will need to create a range. And this range is from 9 o'clock till 9:22. The entire MCR range will be derived from whatever price is created within this time span. We're going to be using standard deviation, wick gaps, candle theory, and the breakout from this range as our entry. Let's see how price moves through this time period. From the bottom to the top of this range, let's draw out our box. Now, I want you guys to go and count. How large is this range? This range is 97 ticks. This is not necessarily a range we want to be trading. Anything more than 60 ticks tends to be lower probability, as because we're trading standard deviation, the larger the range, the more we're going to have to wait for price to react from standard deviation or move to standard deviation. I also want you to take into consideration that we're moving on average 100 ticks a day for our session. And once our range has already met the requirement of almost 100 ticks, for us to get in our trade and expect another 100 ticks is a lot. It could still happen, It's just lower probability. Let's see how price reacts from this top wick that we're creating here, and then this doji that we created at the bottom and the top of our range. I want us to then go and draw out our standard deviation. Change the template. These are going to be our standard deviation levels. I want you guys to go and copy these numbers and place them on your chart. Go ahead and draw standard deviation on previous MCR ranges. And then I want you guys to go and look at how price is reacting from these standard deviation levels. Before we continue in this video, I want to explain a concept called candle theory. It is more a candle count than anything else. It is the initial base candle that taps into a 15-minute wick gap or the top or bottom fortification of a MCR range. Remember in the start of the video, I explained that we need to start thinking in boxes. We're going to use our candles as boxes. We're going to use our ranges as boxes. If you shrink your range down to one candle, it is also a box. So everything is boxes. We're going to be using a lower time frame box that is created from this base candle as candle 0. We have 3 candles after that candle 0 that can break above or below that box that is created from that base candle. That will be the initial lower time frame confirmation for the trend changing, as the first reaction of price is always going to be firstly from the candles itself. Now that we understand base candles or 0 candles, let's see how price reacts from this initial candle created at 922 at the end of our range. Let's get a high and a low, and then we'll quickly see within 3 candles from this 0 candle, so 1, 2, 3 candles, we will have an early indication of where trend currently wants to go. So let's see what happens. We wicked the top, no candle body, so we don't know yet. We stayed inside of that base candle, so no closure yet. Our third candle closed below our base candle. This is a early indication that the trend is currently shifting. This will probably continue ranging until we hit a following 15-minute wick gap. We can then have a base candle from the first candle that touches into that wick gap. And we're going to do exactly the same. We're going to count 3 candles and see where price wants to go. We hit the 15-minute and the bottom fortification doji for the range between 9 o'clock and 9:22. Now I'm telling myself, if we reject from this low and continue higher, what's the first thing I'm going to need? I'm going to need price to confirm with candle theory. So let's start our candle count. Candle 0. Let's see how many candles it takes till we close above. So we wicked the low, but no candle body. We just closed above with the candle body. This could have been an entry for a buy to the next point of interest, which would be the opposing 15-minute wick gap. We tapped into this previous base candle. I'm going to use this then as a base candle again to see where current price wants to go. If we stay inside, I'm going to see it as consolidating and then use a new base candle. I'm still expecting us to probably reverse off of this as higher time frame is showing that bias. But let's see if the candle theory will go with our bias for higher time frame wick gaps. So we wicked both sides, but no candle body. We wicked the high, but no candle body. And this third candle is still inside. I'm going to remove this and then use a new base candle, which is going to be this one because we haven't closed below it. It's also the one that's the highest at the moment by taking the previous base candle's high. So let's see within 3 candles. This is going to be the first. So 2 and 3 candles. Let's see when trend starts shifting. So by our second candle, we had candle theory confirmation, reacting from our higher time frame wick gaps, reacting from a previous base candle. So if we went in for sells here, this is a larger range, so I would have covered pretty much the entire base candle. We did have a 100 tick range from 9 o'clock to 9:22. So if we're going to start retracing, it's probably going to retrace a little bit more than 18 ticks. So let's have our standard deviation. Standard deviation 2. And let's see how price plays from here. Let's enter sells. We pushed back into that base candle. We rejected it out. If you wanted to play it safe, you could have seen this as a new base candle. We have price closing below that base candle, still indicating that the candle theory is showing bearish. Let's see how price reacts from it. Okay, we finally reached the bottom fortification. A good second entry would be when price taps back into this bottom fortification and has a candle count, candle body indication to go lower. So we wicked the low. I'm going to take that as my 0 candle. See where price is currently going. If we close higher, I would probably exit on this trade. If we close lower, I'm going to move my stops above that wick gap. So I'm moving my stops. This is giving us another confirmation candle theory by the second candle that price still wants to go lower. Okay, we just hit our first standard deviation. Look at what price is doing here. We have a clear close below. We can have that back as a 0 candle. Still no close below it. Let's see how price reacts from that. So by the third candle, we haven't closed. This could have been the new 0 candle as it took the high there. So we still haven't closed below it. Still no close below. The 1, 2, 3 candle didn't close, but we still have candles closing below each other. Let's see how it's ranging till 2 standard deviation. And there we took. Okay, it's not going to show now. But yeah, that was a super easy trade that you could have found with MCR, just having price react off of wicks, the extreme of a range, and having candle counting as an entry model on the lower time frame for your trades. This is a very sophisticated model, but it sounds super easy, but it does take time to learn. So please take your time to head to our Discord. I will leave that in the description down below. We have live streams every single day going through New York AM to show the live market. We also have live streams every single weekday at the end of the day showing market reviews. We also have trade recaps or backtesting Saturdays. So I would love to see you guys in our Discord and communicate with us. This has been Zero, and thank you so much for watching this video.